Dear friends, we have discussed almost all the provisions which are in relation to income from salaries. Now, in this session, I am going to touch upon remaining part of the salary. After that, I would like to discuss some problems based on how to calculate taxable salaries. Now, first I would like to touch upon transport balance and how it is dealt with under Income Tax Act 1961. If an organization maintains unrecognized provident fund and is got recognized with existing balance during the previous year, then it is assumed that recognized provident fund was functioning since it was established. Sometime what happens? Employer has set up unrecognized provident fund and that was maintained for some years by the employer. After that, if he got it recognized, then we can presume that unrecognized provident fund was functioning right from the beginning when unrecognized provident fund was established. Now, balance so stored in unrecognized provident fund is transferred to recognized provident fund and that is called the transferred balance. Now, how it is dealt with under Income Tax Act 1961. So far as the employer's contribution is concerned, if it is more than 12% of salary earlier, then excess of 12% will be added to the salary because this is taxable. And at the same time, if interest has been credited earlier at the rate which is greater than 9.5%, then difference is taxable and that will become the part of the taxable salary. Now, this note is very important in this connection. No deduction is allowed under section 80C in respect of employee's contribution which he has made earlier towards unrecognized provident fund, because under section 80C deduction is permissible under section 80C only when the employee has made contribution out of taxable salary of the current year. Now, I am going to touch upon the problem which is based on income from salaries. Mr. Ankit is marketing manager in a company in Jaipur. He has furnished the following particulars regarding his income for the previous year 2011 and 2012. It means Mr. Ankit is not a government employee, he is a private employee. He has furnished some information regarding income from salaries. The first is net basic salary rupees 1,80,000, but this is after deduction of income tax at the rate of 10% and contribution to recognized provident fund at the rate of 13% per annum and rent of the house rupees 4,000. So, it means net basic salary is definitely taxable, but after that the deduction which has been made in respect of income tax is also taxable and contribution which he has made towards recognized provident fund is also taxable. At the same time, the amount which has been deducted by the employer towards rent free facility provided by the employer will also be included under the head income from salaries. Now, bonus is concerned, this is fully taxable, and at the same time travel allowance, of course it is not taxable, but if it is not used fully for official purposes, then we have to see how much part of traveling allowance remains unutilized. This is taxable. Then reimbursement of medical bill rupees 18,000. Treatment took place in a private hospital. Now, this is exempted up to rupees 15,000 and difference will be taken under the head income from salaries. Now, is provided accommodation owned by the company. Now, this will be valued as per the rules as given under Income Tax Rules 1962. Then Mr. Ankit also provided the facility of gardener cook to whom salary of rupees 300 per month and rupees 500 per month were paid by the company respectively. This is one of the facility which is provided by the employer to Mr. Ankit, and that will be taken into consideration while calculating taxable salary of Mr. Ankit. Then he has been provided a facility of large car for official and personal use. The maintenance and running expenses of the car including driver were paid by the company. This is one of the facility which has been provided by the employer to the Ankit. Therefore, it will be valued as per the rules as given under Income Tax Rules 1962. Now, company paid electric bill and water bill of rupees 4,800 and 1,200 respectively. This is considered as discharging the personal liability of an employee and that will be dealt with accordingly. Now, the company contributed towards provident fund at the rate of 13% of salary and interest credited to provident fund is amounting to rupees 11,000 and that is calculated at the rate of 11% per annum. So, this will be also taken into account when we calculate taxable salary. Now, how to calculate taxable salary based on the information as made available by Mr. Ankit. Now, first is basic salary. Since basic salary is rupees 1,80,000, but this is after deduction of income tax, therefore, it has been added to taxable salary, and this is calculated in this manner. 1,80,000 is multiplied by 10 and divided by 90, we get 20,000. Now, rent of the house, since it has already been deducted from the salary, therefore, it has been added back to the salary, and that is rupees 4,000. Now, contribution, that is of rupees 26,520, and that is calculated on the basis of 13% of rupees 2,04,000. This is also taxable, and this is included under the head income from salaries. In this way, the amount has gone up to rupees 2,30,520. Now, so far as bonus is concerned, it is fully taxable. Travelling allowance is taxable to the extent it remains unutilized, and that is rupees 5,000. So, this is also taxable. Valuation of medical facility, since Ankit has been provided the medical facility in the private hospital, therefore, expenses exceeding rupees 15,000 is taxable. So, in this problem, rupees 3,000 is taxable. Now, employer's contribution to recognized provident fund, if it is in excess of 12%, then this is taxable. Since in this problem, employee is going to make the contribution at the rate of 13% of salary. Therefore, in excess of 12%, say rupees 2,305 is taxable. Interest credited to RPF in excess of 9.5% is taxable, and this is rupees 1,500. So far as interest to RPF is concerned, it is not taxable up to 9.5% per annum. If this is in excess of 9.5%, then difference is taxable. Therefore, we have calculated the part of the interest which is taxable in this manner. 11,000 is multiplied by 1.5 is divided by 11, we get 1,500. After that, valuation of car facility. Now, Mr. Ankit has been provided car facility, and car is more than 1600 horsepower or cc. Therefore, it is valued on the basis of the rules as given under Income Tax Rules 1962. What the rule applies in this relation? Since the car is owned by the employer, and this is used for private as well as for official purposes, and all the expenses including the salary of driver are paid by the employer. Therefore, we take out 2,400 per month for the facility of car, at the same time rupees 900 for the facility of driver. In this way, the amount comes to rupees 3,300 is multiplied by 12, we get 39,600. After that, electric and water bill paid by the employer. This is fully taxable, and this is considered as the liability of an employee discharged by the employer, and that is rupees 6,000. After that, we have taken up value of facility of a cook, and that comes to rupees 6,000. Then valuation of accommodation at concession rate, and that is 31,520. How it is valued? Now, so far as the accommodation which is provided at concession rate is concerned, first of all, we have to value the facility assuming that this is rent free accommodation. So, we have valued the facility of rupees 35,590. It is a valuation for rent free accommodation, and this is equivalent to 15% of the salary. After that, we deduct 4,000 because this amount is borne by the employee. Therefore, difference is 31,520. This is taxable. So, in this way, the total salary which is taxable, that comes to rupees 3,27,245. Now, these notes are very important in relation to calculation of taxable salary. Now, so far as salary for valuation of accommodation at concession rate is concerned, that is 2,30,520 plus 1,800 bonus plus 5,000 travelling allowance, and that comes to 2,37,320. Now, so far as garden facility is concerned, it is not taxable. Why? Because whenever employee has been provided rent free accommodation and which is owned by the employer, then garden facility is not at all taxable in the hands of an employee. Therefore, it has been excluded while calculating taxable salary of Mr. Ankit. In this problem, we have covered so many points, perquisites, allowances as well. Now, this second problem is measure problem. In this problem, I have attempted to incorporate some allowances, packages, retirement benefits, so that students will be in a position to know substantially provisions in relation to income from salaries with more clarity. Now, let's begin with this problem. Mr. Ankit has been working with the company since 1st January 1991. His pay scale as on 1st March 2008 is rupees 8,000, 400, 16,000, 700, 23,000. 400 and 700 is rate of increment. He is in receipt of DNS allowance, and that is 20% of basic salary, but 50% as per employment conditions. Now, this point is very important whenever we have to value either rent free accommodation, or this is also useful for other purposes also. Now, he contributes 14% of salary towards recognized provident fund, to which the company makes matching contribution, since both are making contribution at the same rate. But the contribution made by the employer will be taken into account while calculating taxable salary. Interest credited to recognized provident fund, that is 1200, which is calculated at the rate of 10% per annum. So, excess of 9.5%, say 0.5% will be taken into account for calculating taxable salary. Mr. Ankit has been provided a car facility during the previous year for 4 months and 20 days. The car above 1600 cc is owned by the company, but the car is used for both private and official purposes. Now, in this case, very much careful while valuing this facility, that fraction of days will be totally left out, will not be taken into consideration for valuation of this facility. Now, Mr. Ankit retired on 1st October 2011 and received the following. It means he worked up to 30th September 2011. Therefore, he was getting salary for only 6 months. After that, whatever received retirement benefits will be dealt with as per the rules, as per the provisions of the Income Tax Act 1961 and Income Tax Rules 1962. Now, he is in receipt of gratuity of rupees 5 lakh, encashment of earned leave, that is rupees 2 lakh for 200 days leave, and Mr. Ankit is eligible for 40 days leave for every completed year of service. Now, recognized provident fund is rupees 4 lakh, but 50% is related to employer's contribution and interest thereon. Now, we have to calculate taxable salary for the assessment year 2012 and 2013. Now, basic salary, since it is taxable only for first 6 months from 1st April to 30th September, but we have calculated basic salary after inclusion of 3 increments, because rupees 400 is each increment. Since he has worked for 3 years, therefore, we have included 3 increment of rupees 1200. Therefore, he is in receipt of 9200 per month basic salary right from 1st April to 30th September. Therefore, basic salary is taxable of rupees 55,200. Dinner allowance is fully taxable, and that is 11,040, and that is calculated on the basis of 20% of 55,200. Now, employer contribution to recognized provident fund in excess of 12% of salary, and that comes to 1215, that is 1,215. Interest credited to provident fund, it is taxable in excess of 9.5%. So, we have calculated 0.5% in this manner. 0.5 is divided by 10 is multiplied by 12, we get 60. Now, valuation of car facility. As I told you earlier that fraction of days will not be taken into account, therefore, we have taken up only 4 months, but 900 has been taken for this purpose. Why? Because car is owned by the employer, and that is used for both personal and private purposes, but all the expenses are relating to private use are borne by the employee. Therefore, we have taken up 900, but 600 is taken only when the car is not more than 16 cc. But in this problem, the Mr. Ankit has been provided the car facility of exceeding 16 cc. Therefore, we have taken up 900, not 600. Therefore, the valuation of car facility, that comes to rupees 3,600. Now, gratuity, so far as gratuity is concerned, in this case we have presumed that he is covered by the Payment of Gratuity Act 1972. Therefore, first of all, we have calculated the part of the gratuity which is exempted from tax and this has been done under the note that I would like to discuss later on. Now, difference is rupees 3 lakh and 66,247, that is taxable. Next is receipt from recognized provident fund. It is exempted because whenever an employee receives lump sum amount from recognized provident fund after completing the service of 5 years is not at all taxable. Now, encashment of earned leave, this is taxable to the extent of rupees 1 lakh and 66,974. How encashment of earned leave is exempted is calculated, that we discuss later on. In this way, taxable salary is rupees 6,04,336. Now, first I would like to discuss how we have calculated gratuity which is exempted from tax. Now, in this problem we have presumed that Mr. Ankit is covered by the Payment of Gratuity Act 1972. Now, the minimum of 3 amount is considered as the part of the gratuity which is not at all taxable. First is 15 days salary for every completed year of service, and that is 15 upon 26 is multiplied by 21 is multiplied by 11,040, and in this way we calculate 1,33,753. How we calculated? 20 years are completed, but there are some months, but period months is more than 6 months. Therefore, it has been considered as complete 1 year. In this way, we have taken up 21 years for this purpose. So far as salary is concerned, we have taken up salary which Ankit has drawn in the last month in which he retires. Therefore, we have taken up 11,040. Number received as given in the problem is rupees 5 lakh and maximum amount is rupees 10 lakh. In this way, exempted amount is rupees 1,33,753 and taxable amount that comes to rupees 3,66,247. Now, encashment of leave, how much it is exempted, that we have calculated. First is salary of 10 months, that comes to 99,080. Now, how it is calculated? We have taken up 9,200 salary is multiplied by 7 plus 8,800 is multiplied by 3, we get basic salary 64,400 plus 26,400 is the DA which is as per employment conditions. In this way, we get 90,800 and total is 99,080. Now, second is salary of leave not consumed, that is 33,026, and this is calculated 99,080 divided by 10, so that we can calculate average salary, and this is further multiplied by 100 and divided by 30. How we have calculated 100 days? This is given under the note. And third is amount actually received, that comes to rupees 2 lakh as given in the problem, and maximum amount is rupees 3 lakh. In this way, the least amount is 33,026. This is exempted since he is in receipt of rupees 2 lakh. Therefore, difference is rupees 1,66,974, and this is taxable and has been included under the add income from salaries. Now, in this note we have calculated how we have arrived at 100 leaves. Now, since we calculate number of days not consumed by the employee during the service period, this is always based on 30 days for every completed year of service. Now, total leaves of 20 years, that is 800 leaves, because he is enjoying 40 days leave for every completed year of service. After that, we deduct leaves not consumed as given in the problem, that is 300. In this way, he has consumed 500 leaves, but we have to calculate leave not consumed on the basis of 30 days for every completed year of service. So, total leave of 220 years based on 30 days is 600. After that, we deduct consumed 500. In this way, we calculate 100 leaves, and that has been taken into account while calculating the part of the encashment of earned leave which is exempted from tax. Dear friends, in this session we have discussed two major problems based on taxable income from salaries. Now, in these two problems we have tried to incorporate allowances, perquisites. At the same time, we also discuss retirement benefits which an employee receives at the time of retirement. Since in this problem we have touched upon the major problem which is in relation to gratuity and encashment of earned leave. Now, in this problem we also discuss the valuation of facility, in particular the car facility which is provided by the employer to the employee in two different situations. In the first situation, we have taken up that car is owned by the employer and that is used for both of the purposes, private and official purposes. In the second situation, we have presumed that car is owned by the employer, but all the expenses are borne by the employee. In this way, we have tried to explain the provisions with full of clarity in respect of valuation of perquisites. Thank you.